This is the review of crypto assets in 2021. Right, let's have a quick review of what markets achieved milestone-wise in the year 2021, if we're just focusing in crypto assets alone. Okay, so crypto assets, a review in this new asset class in 2021. So looking at performance, the returns achieved by top 20 crypto assets. And what I have done is removed some meme coins. Okay, I've kept Doge, but I removed probably Shibu as well. So we're looking at Matic, sort of 14,000, Luna, 13,000, Solana, just over 9,000 sort of percent returns. These were sort of your layer one gains, right? So the growth in layer ones over that period of year has been extremely lucrative for most investors in these fields. You still got another layer one sort of, you got Avalanche there as well. You got Cardano up 646%, Atom, ETH at 405% return over that period of time. Yeah. So this is just looking at the year of 2021, right? So just 1 year, 2021. Yeah, and Bitcoin over the year, 58% gain. At the sort of weekend, a 16% gain in Litecoin. Another key chart for me for the year 2021 in the crypto markets is Bitcoin's dominance, the fall in its dominance. Now, the fall in the dominance doesn't necessarily mean that that's going to have a negative impact in the value of one Bitcoin, right? That's not what we're looking at. What we're looking at is how big is the market growing? It seems like the market's, it is growing its own ecosystem, okay? It's not just solely focused on cryptocurrencies and specifically Bitcoin and a few other altcoins. We're seeing a lot of growth in the whole ecosystem of cryptos. And I believe one of the sort of the key factors that will take place in 2022 is that it will be called digital assets. It will be called digital assets. It will probably move away from crypto. It will be and cryptocurrencies specifically. It will be sort of calling this digital assets. But we've seen a substantial fall in Bitcoin's dominance from the start of the year, around 70%, and then we start to see it going all the way down back to sort of the 40% range. That's where we're sort of holding at this current moment. So Bitcoin's dominance is probably less than that now, right? It has fallen since then as well. So it just shows you how much growth there's been in the Bitcoin and crypto markets overall. Looking at Bitcoin dollar annualized volatility, has there been changes in the volatility? If you look at the first, we're looking at sort of the years from sort of 2012 all the way up till sort of 2015, 2015. You can see there was a greater amount of volatility, right? Some of those years, 150%. We had over 300% sort of volatility there, around 250, 270% in this region here. And since then, it's been okay. The only time that I would say it's a bit of an outlier in 2020 would have been in this period over here, where we saw a substantial amount of volatility taking place. And that was pretty much close to around the COVID scenario, the pandemic, the crashes that we had seen in total in the entire markets. More of a systemic risk rather than intricate based on just Bitcoin alone. But it doesn't seem that there's been a lot of cooling in volatility, right? So volatility still remains sort of elevated in the region of 50 to 100%, right? So this is where we maintain. You can see sort of the 1 year moving average still sort of moving to the upside, especially most recently. And this is Bitcoin USD historical returns. Okay, so Bitcoin USD historical returns. Okay, just take a bigger picture view, right? Look at the performances achieved on a month-on-month basis, and where we've seen a substantial amount of sell-offs, substantial amount of gains, and also review the annual, and then we have the averages at the bottom, right? So this tracks it from 2011 up until 2021. Specifically, if we look at just the annual, we can see in 2011 over 1,500% return. and that continues another 186, 50, well, over 5,000% return there. 2014 was one of the biggest slumps, and that's one of the bear markets, following on sort of the 2013 sort of move there. So a bit of a correction there, so 57% correction. Looking at 2015, 35%, 16, 125%, 17, 1,332%. Then the next crash, going on from the substantial move that we had in 2017, or correction, should we say, we can call this a correction, was 2018, 73%. Okay, so 73% correction. And then 2019, 92% return. 2020, with a 300% gain. 2021 didn't lead to the hopes that we had assumed that we were going to see in the last quarter of 2021. So we still had achieved a 58% return. So if we look at the average of these annualized returns is 808%. The median is 125%. What we see here is Bitcoin's hodlers. Okay, so who's holding onto Bitcoin? And we'll see sort of the waves that this is showing us. And this is anyone over a year. Okay, so someone holding for more than 1 year, which actually is around, you can see right at the bottom there, 57.1%. Okay, so 57.1%. This is focusing on BTC USD. You can see the price of BTC USD. Okay, so we can see the price of BTC USD over the sort of from 2013 up until sort of the first of 2022. The growth that we've seen. This is sort of a logarithmic view. Okay, so logarithmic view over here. At the same time, we're seeing the peaks and troughs of holders. Okay, so we're seeing peaks and troughs of holders. Right, and you can see cycle tops and the bottoms as well. Okay, so you can see sort of cycle tops there, and then even though we saw, you know, a bit of a decline in long-term holding, we still see growth and the gains there. Right, we reached the top in this region over here in 2016, and then we're seeing sort of fallers. Right, so as the price rises, some of those longer-term sort of holders start to sort of look to take profits in this region here. And we're seeing the next move higher, right? So we're seeing the next move over here. And this is where we are at this current moment. Shy of 60%, we're shy of 60%, but this is how many hodlers we have at this current moment. And yeah, the question is this going to lead to the next ball, the next move to the upside of accumulation that's occurring in the crypto assets, especially that we've seen the most recent correction occurring. Something else to look into is in the year 2020 and 2021, one of the key relevant areas that we could take on is the amount of corporation involvement in the crypto ecosystem, in the crypto space. And this shows us crypto funds assets under management by corporations and funds out there. Okay, and that's grown substantially. So looking at from 16, 17, 18, 19, 20. So up until there, it was under 20 billion. But from that point on, we've tripled that. Okay, so we're now at 60 billion going into sort of the end of 2021. Okay. And who are these? Some of these publicly traded companies with more than 1,000 Bitcoins on their balance sheet. Well, we know some of them, right? So we have MicroStrategy by Michael Saylor. You know, Bitcoin owned 121,000. I think he's actually got more than that now. He's looking to achieve 1% of the entire market. Tesla with 43,200. Square has 8,000, over 8,000. Marathon Digital Holdings close to 7.5. Coinbase 4,400. So yeah, so you got sort of, you know, all these firms purchasing and holding on to a substantial amount of Bitcoin on their balance sheet. And these are all tradable markets, guys. These are all tradable assets. Yeah. And one of the other key areas that came out from 2021 was China's involvement in the crypto ecosystem and what had taken place there. So we can actually go through. I've got a great snapshot of the bigger picture view of what's happened over multiple years, not just 2021. Even a lot of this is actually just focused in 2021, but it starts actually in 2013. So China bans banks from handling BTC trades and declares BTC illegal tender. And this was the subsequently sort of to this news what the markets returned, right? So we can see negative over a 90-day period of 35%. In one day, 18% fall. Again, 18% fall. We could sort of miss some of these over here. So we've seen a false report stating that the PBOC will halt all BTC transactions released. So let's just skip through up till 21, okay? And it starts with China reiterates its 2013-2017 stance that financial institutions can't provide crypto-related services. We saw 14% move here. And this is how the markets react. The markets will look to quickly discount information. Based on this, we're starting to see that China are not really wanting to have anyone involved in the crypto ecosystem and with Bitcoin. And then we had shortly after, China announces a crackdown on BTC miners and trading. On the day itself, not much change, but then over the course of the period, we started to see 7 days and 30 days, 4% down, 5% down, but then after 90 days, it was up 25%. Right? Inner Mongolia announces 8 proposed measures to restrict BTC mining. Oh, I got ahead of myself there. And then moving on, Baidu, Zhihu, and Weibo censor keywords related to major crypto exchanges, BTC miners in Xinjiang, and order to shut down operations. Okay, again, not much negative there, right? We didn't see much of a move occur. In fact, 90 days later, it's up 58%. Further, state-owned energy suppliers to cut power to 26 local mining firms. That did have a bit more of an impact, but 90 days later, up 26%. And then China's central bank says all crypto-related transactions are illegal. And then, we saw 5%, and then a 2% 7 days later, but actually 30 days later, it's up 42%. Over 90 days, up 19%. So out of all these historical news announcements that had occurred, if you look at the average return of the 90-day, so the average 90-day return it's up positive 53%. The median is 27%. Now, another key development that came out from 2021 in regards to crypto assets is the move away from cryptocurrencies to crypto assets, and then also into crypto ecosystem or digital assets. Okay, whichever terminology you would like to use, whether it's crypto assets, digital assets, crypto ecosystem, whatever it might be. But this shows the sectors that have been developed from cryptocurrency. So with Bitcoin, we've seen its return 58%. Altcoins on average 505% return. Centralized exchanges up 488%. DeFi up close to 300. Decentralized exchanges, you got meme coins, you got smart contracts, but look at NFTs, non-fungible tokens, a substantial amount of gain over that 1 year period. And finally, as we come to the end, we're just having a historical view of Bitcoin. What's happened over the course of that 1 year of 2021, right? Okay, so we can go through some of the key events and see how they fared in regards to market price. Okay, so 2021 begins with buzz of institutional buying. Okay, and that's where prices were around the 30K mark, and we started to see price rise. It went on to 40K, retraced back to 30K, and then breaks up to the upside and continues to move. As by the 8th of February, Tesla invests $1.5 billion in Bitcoin. And that just leads the market to really sort of, fly up into sort of and cross above the 55K mark. By February 19th, MicroStrategy raises $1 billion in debt for Bitcoin offering. Right? A bit of a correction at this point over here. Right? And then another new high being made. March 13th, surging institutional demand drives Bitcoin over 60K. So that's where we just surpassed the 60K mark for the first time. Okay. And then we had, of course, Coinbase shortly went public thereafter on the 14th of April, another new high being made, close up to around 64K. From this point onwards, bit of a decline, bit of a correction and decline. Tesla suspends Bitcoin payments over environmental concerns. Okay, so that was one of the key themes in that year, right? And then we had all the China-related news, right? So crypto content was blocked, and yeah, just China widens their crackdown on the 4th of June. But the 10th of August, we had US Senate OK's infrastructure bill with contentious crypto provision within that bill. Yep. And then September the 7th, Bitcoin becomes legal tender in El Salvador. And we see prices back sort of hovering around the 45 to 50K sort of mark, corrects back to the 40K mark. Then we had the next push higher. And this is where October 15th, SEC approves the first US Bitcoin futures ETF. And then again, just a nice, almost, yeah, a break of the prior high, crossing just above the 65K mark. So Bitcoin hits its new all-time high. And then thereafter, we've had a bit of a correction occurring. Okay, so renewed COVID concerns jolt world markets. We also had the asset purchasing programs being reduced, balance sheets sort of being reduced, tapering taking place by the Fed. Also, the talks of higher interest rates also having a bit of a knock-on impact, as prior to 2021, in 2022, from September up till December, a lot of the move from 10K, somewhere between 5 to 10K, all the way up to about 30K, was due to all of the stimulus packages being offered and the money printing that's taking place in the US. So we've seen a bit of a correction occurring now. And I think most of that correction has occurred now. I don't think any further news of reduction on balance sheet and other sort of central bank monetary policy news that comes out is less likely to have an impact in the crypto markets unless it's extremely hawkish. It's a surprise factor. I think what we may see now is the ESG compliancy that's required going into 2022, and the environmental impacts of Bitcoin has been the most recent rhetoric from what I've read in the last few days. So that could be another one that could lead markets to a further correction if we hear more environmental concerns or crackdowns taking place around this theme. But at this moment, prices are hovering, and they're hovering still above the 40K mark. We're currently at 42,635. Okay, that wraps up crypto markets in 2021. But finally, yep, so I do have another one to actually sort of cover, is now we know that what price is done over that period of time. But at the same time, one of the most important tools of valuation and the potential growth of where we see Bitcoin being valued at is based around the 4-year cycle. And Plan B put this together, which is the stock to flow model, which gives a view of where price is in comparison to the valuation on the 4-year cycle. So you can see how over the long term, price has if we take it from 2010 up till 2015 potentially, right? So sort of maybe latter part of 2011 till 2015, price has stayed above this line. Price has stayed above this line. At this current moment, from 2015 up until 2018, is probably one of the best times for this, where it proved that it worked very well. Right? We'd seen it's not going to be perfect, but we can see price actually hovering around that line and surpasses the S2F model. It continues that all up until 2020, but since the last few years, 2021 and coming into sort of 2022, it stayed below the S2F model. Okay, we are below the S2F model, and it doesn't mean that it's failed. It doesn't mean it's failed. What I would like to indicate is that this valuation model is the same as, for example, for an economic country, for a country based around the economic activity. What you want to see is, in the long-term, productivity. What is the productivity rate? What is the intrinsic value? Right? And market prices of that country, right? It's not going to be, you at times you're going to have, for example, higher inflation, as we've seen at this moment, or higher unemployment. You might see GDP concerns, and that may sort of market down away or from or above that productivity line, that intrinsic value. Same for individual companies. Not all companies just move in an upward direction. You see major corrections occurring, right? Facebook might be a most recent example, and we've seen a bit of a correction occurring there, whereas Apple has gone on to sort of hit the 3 trillion mark. So there is a difference between valuation of an asset and in comparison to its asset price, okay, the market price. At times, you're going to have markets that are optimistic, and other times you're going to have it as pessimistic, okay? And this might be a time where we're seeing a bit more pessimism in the market in comparison to where the model expects Bitcoin to be, right? But that also means that it might be undervalued at this current moment for the long-term view, okay? It might be undervalued for the long-term view. So that's another way to see it, is that currently the market price is below its valuation model that we see here, and therefore it's undervalued, right? But we may see much larger correction. Hey, there is talks of this not being a model that fits anymore, based on sort of new dynamics, new factors coming into play. But it's a good chart to look at. Have a look at it for yourself, guys, and let me know what you think.